It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast as we do this run-up to the end of 2024 together, talking about your property news 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Monday morning, where did the weekend go? October the 7th today. And if you are wondering how much your property has gone up recently, well, I can tell you that dwelling values rose a modest 0.4% in September, consistent with the growth seen in July and August. And CoreLogic tells us that nationally, housing values increased 1.0% in September quarter. That is the lowest quarterly rise since March of 2023. While Sydney values grew 0.5%, it did mark the slowest growth since early 2023. Melbourne, Canberra, Hobart and Darwin all experienced declines, with Melbourne being the front runner at minus 1.1%. Mid-sized capitals, let's look at those. Perth, also Adelaide and Brisbane, they saw slower momentum, although they did continue to outperform. Perth rose 4.7%, Adelaide 4% and Brisbane 2.7%, reflecting a gradual easing of growth across the market. So with all that said, let's bring in Eliza Owen from CoreLogic, who is the head of research there. And good morning to you, Eliza. Welcome back to the Real Estate Breakfast. So as I mentioned, Sydney slightly up, Canberra, Hobart and Darwin and Melbourne down in the marketplace.
Yeah, good morning. Thanks for having me. It's fair to say that we're moving through a very diverse market. We always say that Australia is not one housing market, but at the moment in particular, there's a really wide range between the top performers, Perth, Adelaide, Brisbane, and those more subdued markets that you were talking about, Melbourne, Canberra, Darwin and Hobart, which each saw quarterly declines. Sydney is still up, but I think that's because it's a market that historically has been relatively constrained when it comes to new levels of supply. At the moment, it's being driven by more affordable pockets of the market that offer house and land for a growing number of young families. And even though market values are still rising, you can even see momentum coming out of the Sydney market. As you say, that 0.5% lift was one of the softer growth rates that we've seen in the market over the past few years. It's down from 1.3% in the June quarter, and it's down from a 2.5% quarterly increase for the September quarter of last year. So at 0.5%, we can see it's definitely slowing.
Yeah, so, if you're in Sydney and you're saying, oh, gee, it's not much of a rise, it's very, very slow, just compare yourself to Canberra, Hobart and Darwin and Melbourne, which is all down, which circles us back to Perth, Adelaide and Brisbane. They saw that slower momentum, as I suggested, although they did continue to perform, and that's the positive side for those markets.
Yeah, absolutely. Anyone who has owned in Perth or Adelaide pre-pandemic has seen extraordinary cumulative change in home values. Since March of 2020, Perth's home values are up 75%, or the equivalent of a $341,000 increase in the median value. Adelaide has seen similar performance, up 69%, or an additional $330,000 added to the $330,000 added to the median value, and Brisbane sitting up 66%, or $350,000 added to the median value. So even though those growth rates are finally slowing down across these cities through the cycle, at 4.7%, Perth's quarterly growth rate is still extraordinarily strong. And at the moment, like most cities, it's probably being driven by more affordable pockets of the market at this stage because people have been priced further and further out of expensive markets.
Is there a correlation in the market reflecting the slowdown in the pace of growth versus the homeowners increasingly looking to sell at this period of time?
Yeah, so one of the features of the housing market right now is that we're going through a really strong spring selling season, stronger than this time last year, and about 9% higher than the historic 5-year average for spring, with new listings added to the market over the past 4 weeks, sitting at about 41,000 properties nationally. And where there are the most sellers is where we tend to see the softest market performance as well. So total stock levels across Melbourne, for example, are 21% higher than where they would usually be this time of year. And that additional supply helps to absorb demand. It gives buyers more choice so they can negotiate asking prices down. And that ultimately brings the value of the market down as well. So there's definitely a strong correlation between areas that are more oversupplied, if you like, and where prices are flat or falling.
We are talking to Eliza Owen this morning on our Monday morning from CoreLogic. When we come back in just a moment, we're going to be having a look at some of the vendor metrics softening. What does that mean? We'll find that out next.
Why pay a premium for advertising that's too expensive? Our listeners are actively engaged in the real estate market. Get your message directly into the ears that can influence your business.
Now, you said $250,000 for a one-bedroom apartment. What?
Yeah, I know, right? It's crazy. Usually that type of property is a permanent rental. It's leased out to, say, a staff member that lives and works on island. Again, still really good investment. The rental market's really tight and in high demand on the island, so there's usually no vacancies. But you can absolutely enter the market at a really low price.
Have you had those rent vestors, those sorts of stories in your market?
Most definitely. A couple, actually it was only last month, I had 2 buyers. They did come through a buyer's agent, and that's what they've done. It's cheaper for them to rent down there and have an investment up here because the rental yields were at 8% on these 2 houses. I don't know how the individual, or even a couple, then you've got to live and survive in a place like Melbourne, how they can afford it.
Companies trying to build so many of these houses, which just isn't actually happening.
Without question, what we've been doing isn't working. We have to shake the system and really look at all new avenues, and we need to add more into the supply side. It's certainly not a demand side piece. We need more houses to get built.
From powerful and up-to-date news to professional real estate experts with the latest property trends on the Real Estate Podcast.
And it is a Real Estate Monday after the weekend. We are talking to Eliza from CoreLogic. And this question, alongside the rise in real estate listings, you have also seen vendor metrics soften, signalling weaker selling conditions. So, Eliza, perhaps just explain that to our listeners, what those metrics are exactly.
So vendor metrics are these data points that describe what selling conditions are like. Some of the most popular vendor metrics that we look at are the clearance rate, which is the portion of properties that sell successfully at auction week to week, and days on market, which is the median amount of time that is taken for properties across Australia to go from their initial listing date to the contract date. And what we're seeing in those vendor metrics is that they're deteriorating a bit, which means the market is looking a little more in favour of buyers. As we discussed, because supply is much more robust than this time last year, buyers essentially have more choice and bargaining power. So we've seen the combined capital cities clearance rate slip from the sort of high 60% range at the start of this year to their lowest level since late last year. The final combined capital cities clearance rate last week was sitting at around 60%. So that's been slipping. And then if you look at the time it takes properties to sell, so that days on market metric, that's gone from 25 days across the combined capital cities in the June quarter to 28 days through the September quarter. And year on year, you can see that some markets have really loosened up, like Melbourne, where there's a lot of competing supply, selling conditions are not great, days on market have gone from 27 days this time last year to 41 days through the September quarter of 2024.
Wow, okay. And just sort of in that lane, is it fair to say that affordability constraints and reduced borrowing capacity continues really to support stronger conditions across the housing markets with the lower price points?
Absolutely. And I mean, the irony of it is too, we talk about it being a buyer's market because prices are coming down. Part of the reason prices are coming down is because there aren't as many buyers that can participate in the market. Or where they can, they're having to target cheaper and cheaper properties because of limited borrowing capacity in the high interest rate environment and affordability constraints. So one of the ways we measure this is breaking the market up into different value chunks. If we look at the combined capital cities market, the bottom 25% of home values, which is anything about $680,000 and below, has seen a remarkable increase in value of 12% over the past year. If you look at the top 25% of the market, which is about 1.3 million and above, that has only increased about 4% over the past year. So double-digit increases across the low end of the market, and that is, again, just a reflection of more and more people having to target the lower end of the housing market because that's what they can afford, and that keeps more of a floor under values and keeps them rising more strongly at the low end.
And just on that point, the CoreLogic report does have some good news for those eyeing a regional cheaper location to move to because of the growth conditions that you talk about across regional housing markets have eased.
That's right. So it's a very different environment to what we were seeing at the height of the pandemic, where movement from capital cities to regions was at an all-time high, and quarterly growth rates in regional Australia peaked at about 8% in the 3 months to April 2021. What we're going through now is a much more normalised cycle in regional Australia. Values are generally rising, but at a much slower pace of just 1% in the September quarter of 2024. And in some markets, values have even started to come down a little bit. So if we look at some of the major regional centres, for example, perhaps no surprise, Ballarat and Geelong, where there's a lot more weakness in Victoria, fell over the quarter. But also the Southern Highlands and Shoalhaven, a very popular regional centre in the south coast of New South Wales, is down 1% over the quarter. So for those looking for that tree change or sea change escape, there are definitely some buyers markets out there.
Yeah, that's Shoalhaven. That's an area that we have talked about, so that's interesting. All right, then we'll leave it there, Eliza. Great to catch up with you on our Monday morning. Enjoy your Monday. Look forward to catching you back soon.
Thank you. You too. Thanks for having me.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights. We connect you to the best real estate information across Australia. The Real Estate Podcast.